at Midday by a panel of industry thought leaders. For business owners who simply want to be in the know about the latest and most significant news and initiatives in the Australian business landscape that impact on how they do business. Our panel of advisors aim to educate and provide strategic insights to the changes in the economic and financial landscapes that affect small business. We aim to guide our viewers to navigate through business challenges throughout COVID and beyond. I should warn you, ladies and gentlemen, that the advice provided by this panel is of the general advice nature only, and if you'd like some personal advice or chat more, please reach out to the panelists individually. Ladies and gentlemen, let's hear from our panelists now. So starting with Adam Lyle from Business Doctors. How are you today, Adam?
G'day, Bernard. Thanks for having me.
Lisa, don't call HR, Amiga Garrido from Enigma HR. How are you this morning?
Hello, I'm very good. I'm glad to be here this morning.
Sam Gracie, Show Me the Money from Money Clip Private Wealth. How are you this morning?
Fabulous, thank you.
And Ian McLaughlin from Imperium Accounting and Tax. How are you?
Very well, Bernie. Thanks very much. Good morning, everybody.
Ladies and gentlemen, I'm Bernard Tuimau of MGA Insurance Group, and I'll be your host for this morning. Adam, I guess I'll start with you. What's news in your space?
Well, the talk of the town at the moment in the insolvency space is, of course, the amendment that has now hit Parliament. It's being discussed. There's some information that has come out about it. I do want to touch on that just briefly, and then I'm going to come back to a couple of hints and tips that I was asked to provide from last week. The Corporations Act amendments that are now before Parliament really are designed to mirror what you find in the US with Chapter 11. It's funny that this has happened now. I actually get it. I understand why the government would want to make it easier for business owners to provide them with a platform to get some resolution and some certainty when they're under threat. As a result of the COVID-19 pandemic, the government put in place some emergency moratoriums across a range of areas. One of those was the prevention of companies and individuals to be either wound up or made bankrupt during this period. That moratorium finishes at this point in time, it could change, on the 31st of December 2020. Happy New Year. Now, the interesting thing with that is that by finishing it on that day, if you were a company that was owed some money, you could then proceed with legal proceedings to wind up that debtor and get your money back by putting the company into liquidation. And if you were going to do that, it could be because you might have some trade credit insurance. You might actually have some, you might insure your debtors. You might just have a policy that you want to make a statement to all the people that are in the industry. You might just want to get your money back. Well, the courts usually close during January, and every lawyer in the land will tell you that there's going to be a lineup. For those people who are watching from Sydney, you'll be lined up from Phillip Street down to Circular Quay just to get in the door to file for a winding up application. The last time a spike of wind-ups happened like that was in the first quarter of 2017. And there were in excess of 1,000 wind-ups nationally a day. And that was pretty heavy. Remembering that Australia's largest creditor is the Australian Taxation Office. Now, the debt owed to the tax office has increased quite considerably during the COVID period. It's under control because most people have been talking to the tax office. Why? Because they want their JobKeeper money and they're doing their lodgements on time and all those sorts of things. But the reality is that after 1 January, debts are going to be called upon and people are going to be needing to pay those and they're going to be winding them up. So if you have trade credit insurance, you're going to be required to wind someone up in order to get that insurance payout. If you're just owed money and you want to get it, just be aware it's not going to happen. You're not going to get your money on the 1st of January. So you need to provision for that debt to be quite some time down the road in 2021 in order to get a recovery. I'll talk more about that if anyone wants to know more in the coming weeks. The other thing that I was asked about was last week I spoke about the signs of insolvency for someone who is a supplier or someone who is a debtor or a creditor in your world, in your business world. And I just want to reinforce the point that I think I made 3 weeks ago. If you're a business owner and you're a director of that company, you're making the day-to-day decisions about everything to do with that business. And on top of that, you own your home. That means that you are on title. Over this period of time during the moratorium, you've been protected from any claim against you for insolvent trading if the company goes into liquidation at some point in the future through no fault of your own. So if something happens, you get hit by a bus or you've had a heart attack or something goes wrong dramatically that you have no control over, a liquidator is prevented from taking any action against you for insolvent trading during that period. That moratorium finishes on the 31st of December. So if you continue to trade your business after 1 January and your business can't pay all of its debts as and when they fall due, and remember last week I said this, as soon as you don't pay one debt, you can't pay all your debts. That means if you haven't paid your tax debt, if you haven't paid your electricity bill, you haven't paid your supply in accordance with normal trading terms, you could be found to be held that you are trading the company whilst it's insolvent. And whilst you're doing that, a liquidator who is subsequently appointed could in fact pursue you personally for any debt that you continue to incur. Now that is a very risky situation to have. You certainly should be speaking to your accountant. You most certainly should be speaking to your insurance broker about making sure that you have directors and officers liability insurance. You certainly should be looking at trade credit insurance. And you need to be listening, hopefully, to everything you're hearing here on Business Insights. Because what we are all trying to do is prevent disaster. That's exactly why we put this together. So I hope that's been helpful. I'm happy to expand on that moving forward in the coming weeks. Thanks for your time.
Thanks, Adam. Some really great points there, and I'm sure it hit home with a lot of small businesses. Now, let's move over to Ian off the back of that. Ian, what's in your space this week?
Thanks, Bernie. Just a couple of things that I want to touch on this week. The first one is that, so we mentioned a couple of weeks ago that the ATO is thinking about keeping open those October job keeper declarations to the end of November. So they're actually doing that now. And the reason being is that the ATO's systems did have some issues. So the cutoff date was the 14th of November. However, businesses now have until the end of the month to make their October declarations. So that's a really important piece. Part of the reason was that they were having issues with the tier 1 and tier 2 status of the employees that were being reported through the business's single touch payroll software. They were then meant to get sent to the ATO. Now, some have, some haven't. And I actually had a case where
Looks like Ian's just dropped out for the time being. I might actually, Lisa, I might have...
where it was done. Sorry, one second.
Lisa, do you mind if we head over to you for
That's
a sec?
right.
Come back to
No,
you, Ian.
that's okay. Sorry, I'm back now. I'm back.
Oh,
so what I was saying there was that you can call the ATO and say, my tier 1 and tier 2 employees are not coming up on your system. Can you please manually adjust at your end which employees are meant to be tier 1 and tier 2? And they can do that. And when you log on to the ATO to do your declarations, and if your tier 1 and tier 2s aren't coming up, don't wait for it to be updated on the ATO's end, because you've only got another 7 days to do it. You just need to say to the ATO, we need to adjust this manually, please. So that's the first thing. The second thing is that I'm really noticing with a lot of businesses that don't have a cash flow in a cash flow forecast in place, they're really running a big risk of not knowing where their business is going to stand once these JobKeeper payments end. because, I mean, we've only got another 2 for this first tranche of JobKeeper 2.0. And then we're not even sure then if they're going to qualify for the second tranche of JobKeeper 2.0, because that's based on our December 2020 quarter turnover compared to our December 2019 quarter turnover. So it's really prudent that for the last 6 to 7 months, if the business has been relying on JobKeeper, that you really put a cash flow in place, because it's the only thing that's going to enable you to answer whether your business is going to be able to survive or not. And then if not, what do you need to do to put in place to make sure that it will? So the third point that I wanted to touch on today was that the Morrison government has delayed a decision about whether to push back a scheduled increase in the superannuation guarantee until mid-2021 in response to the economic fallout from the pandemic. So there was a retirement income review which was released on Friday, and that shared findings about how Australians can fund their retirement using voluntary savings and reverse mortgages rather than solely relying on superannuation. So the superannuation guarantee is scheduled to increase from 9.5% to 10% in July 2021, before increasing eventually to 12% by 2025. However, Morrison's indicated that he will now postpone making a decision about the planned increase to the super guarantee until May 2021 due to the economic fallout of the pandemic. Josh Frydenberg said in a statement, proposed was that super reforms would benefit Australians by $17.9 billion over the next 20 years in the form of lower fees, improved returns, and a streamlined superannuation system. However, the Council of Small Business isn't on board with this. And he says that increasing the superannuation guarantee is not a win for workers, given the effect that high superannuation payments are going to have on small business. And it's going to be the employees that are going to pay for this. We're not going to see a decrease in wages won't see a decrease. What they're going to see is less hours and less jobs. So the overall thought from the Small Business Council of Australia that it's not going to be a win for workers, and the time to increase this superannuation guarantee is not now, as it's not practical. So let's wait and see what happens on that. I think it's going to be really interesting, because that has been in the works for some years now to eventually get that super guarantee up from the original 9%, and it's been 9.5% for a few years, up to the planned 12% in 2025. So I'm going to keep the panel and viewers updated on that as soon as we know more. Thanks very much, Bernie.
Thanks, Ian. Great advice. Lisa, we'll head over to you.
Great, thanks, Bern. Thanks, Ian. Today, I just wanted to go through very quickly the unemployment rate, unemployment figures, because they've been released back in September 2020, but we haven't really covered that, and we haven't covered the whole background to it. So just as a recap, the Australia's unemployment rates reached 13.8% in August, rising in all states except Victoria by a total of 194,000, according to the latest figures based from Roy Morgan research. Now, I just wanted to clarify, and it's part of this education process, that the unemployment rate is the number of unemployed divided by the number of civilian labor force. So everyone without a job isn't necessarily unemployed, at least according to the Bureau of Labor Statistics. All right, to be counted in the unemployment rate, you not only have to be without a job, you have to have actively looked for work in the past 4 weeks. So that's the reason why those statistics excluded Victoria, because at that time that the numbers were being counted, Victoria was in lockdown. So clearly many people argue that the real unemployment rate is much, much higher than reported. So the results bring the total number of out-of-work Australians to 1.98 million. That's a lot. Apart from the unemployment, another 1.29 are reportedly underemployed as they continue to take part-time work or looking for other work to augment their earnings. Roy Morgan's unemployment estimate is significantly higher than the figures from the Australian Bureau of Statistics, which placed the July 2020 jobless rate to 7.9%. So basically, based on this research, the Australian labour force consists of 14.3 million workers, up by 105,000 in July. and the rise in unemployment was basically due to people starting to look for work again, as most of Australia continues to open up its borders and continues to open up its industries. Of the thing that I wanted to raise today is, of the unemployed, more than 1.2 million are people searching for part-time work. So it goes back to the discussions I've had in the past few weeks, that this return to normal is definitely a new normal, where people would probably want a mix of, or the hybrid of, working from home and working at the office, or in fact actually arguing that they would prefer part-time work. There are 768,000 of that 1.2 million that are looking for full-time opportunities. Very interesting statistics there. So the interesting thing here is that as the states are beginning to reboost and reboot and beginning to open its borders, it's very critical for us to start looking at these statistics as well. The Morrison government is now opening the whole migration policy again to the global market, as it starts to hunt for talent overseas to boost Australian jobs. So a newly created task force is called on to formulate incentives like tax breaks, special visas, research grants to convince high-value foreign businesses and talent to relocate to Australia. So it's called the Global Business and Talent Attraction Task Force, right? And it's been created as part of the opportunities to create employment through the government's Job Maker program. So what I'd like to do perhaps next week is talk a little bit more about that, because I'm sure we also have viewers and businesses who actually have casual or part-time workers who actually hold certain visas. And that's something I'd like to talk about next week. That's it for me, Ben.
Thank you, Lisa. Some great tips and advice here again, as always. We'll head over to Sam. Sam, what's the money markets and the finance market doing?
Yes, thank you, Bernie. I'll cover off on the interest rates first and the property. Well, look, it's actually been quite, well, it has been very quiet on the rate side since last week. Really not much significant update has been provided since a week ago. What we are seeing though is significant service level headwind for the banks, and we're getting loans looked at by the lenders quickly. So many of them are now running at 10 to 15 business days for them to even pick up a loan and look at it. So obviously that's a bit of a concern, especially in the age of technology that we live in today. That, you know, it might take this long. I remember when we used to fax applications in the past, many moons ago. It definitely got looked at much quicker than it does today with all the technology and digital work that goes behind it all. But of course, the silly season is upon us, and that's probably one of the reasons why things are getting a bit tighter. And there's deadlines for the settlement pre-Christmas, and of course this makes everyone on the edge essentially because of that. Now moving on to the housing, we had another great week of housing activity, and the auction results was actually quite good as well. Just put that up very quickly for you guys to have a look at. And as you can see, Victoria and New South Wales, two biggest markets, they had really good auction clearance results. And some of the other ones down the bottom probably matter a little bit less because they didn't have a lot of results going through. But certainly Victoria has, obviously since the lockdown has finished, and it's starting to come through quite nicely. So it's going to be pretty strong going into Christmas. And what I would say is, if you're going to go to an auction, you better brush up on your auction bidding skills. You either have to go hard like they did at the block last night, and have killer bids, or really learn to who your opponents are, so then you can bid at the appropriate time for the property that you want to buy. But expect high activity and potentially not a lot of discount to the asking price at this point in time from what I can see at the moment leading into Christmas. Very much different to what the expectation would have been if we had this conversation, say, 3 months ago. That's for sure. So that's just a little bit of an update for you guys on the on the property market. Share markets itself had another really solid week. They rose by about just over 2%, and it's on track to give us best month so far in the last year, in particular by what's happening with the banks. So the banks have had a bit of a resurgence, and that's really kicked up the market of recent times. So of course, this is all happening. We had a terrible October, especially the start of the month as well. Vaccine has helped, Binance has helped, and this is all still happening in the backdrop of alarming rising numbers of COVID in Europe, which is partly in lockdown, and who knows how long they're going to be in lockdown. And of course, the runaway numbers in the US, which is just getting worse day by day. So, of course, I guess as long as the benefit of vaccine news is in the background, that's probably going to help the markets. Now, ASX itself actually had a really tough week last week. They had an outage that stopped them trading on Monday, and had sporadic issues on Tuesday. So, ASX is one of the best regarded exchanges in the world. So certainly their egos were definitely tested last week because of what actually occurred. As Ian said, the retirement income report that came out was behind the conversation around the superannuation guarantee not necessarily being supported to be increased. And as part of that, there was talk that essentially any increases in super will be offset by reduction in wage growth, which is obviously going to have an impact on everyone. One thing we'll know, Labor will probably still fight it, despite the findings. So we'll see how it all plays out in the Parliament over the next little while. Now, just as the last couple of points, I recently did a presentation to a group of business owners, and we discussed the value of contributing to your super over time. And now, take into account someone who's, say, 40 years old with about $200,000 in super and earning on average 6% per annum. So their balance is affected by approximately gross amount of $200,000 for every $500 per month extra they put into super during that 20-year period. And this is the benefit of compounding. So I guess my recommendation to you is that if you can afford to put a little bit more in super, every little bit has a big impact down the track. And of course, what that means is that you're setting a better level of lifestyle for you in retirement. Now, of course, and I'm sure Ian will probably touch base on this in due course, but the Treasury also approved large asset write-offs for multinationals. And so they'll have the ability to invest more in the business, and we'll probably see some improvement in the share prices of some of those multinationals coming through the ASX as well. And that's the news for me this week.
Thanks, Sammy. Great advice as always. I guess in the insurance space, it's been an interesting week. The New South Wales Court of Appeal has ruled against insurers in the business interruption test case heard last month. So you would have heard me speak about this on a couple of occasions throughout the series around the replacement of the previous act that was dated in 1908 and the replacement of the Biosecurity Act that happened in 2015. So I probably want to cover this off in 2 weeks because there's quite a bit to get through. So insurers sort of relied on this clause and citing that the intention of the clause is not only the act they referred to in 1908, but also the replacement act that happened in 2015. So basically, the courts have come back and ruled against that and said that insurers cannot rely on that. So as you can imagine, these have massive implications. We're still waiting to see how the insurers will respond to this. They have up until mid-December to put in a response to appeal this test. The decisions made by the courts, but it's going to be quite interesting. So the exclusion around the Biosecurity Act and which act should take place doesn't mean that claimants are off the hook. So there are still other exclusions and clauses in the business interruption section that insurers may still rely on to decline or deny your claim. So my advice to you, if you're a business owner that carries a business interruption policy, please work with your insurance broker or your insurance advisor to see whether or not you meet the criteria to lodge a claim. This is going to be pretty interesting. In the last week alone, we've had a couple of clients come forward to look at submitting a claim. So it's going to be pretty interesting. It's going to be interesting to see as well what the insurers do. My sort of thoughts will be that insurers will know no doubt tighten, I guess, the wording around this moving forward. Keep in mind that the insurers' argument also is that they didn't collect enough premium for this, and it was never factored into the premiums when they collected this premium. So there are some reports that are saying that the Australian insurance industry alone will be in deficit by about $500 million because of payouts on the business interruption claim. It's going to be quite slow. So my advice again is clients, if you do have a business interruption policy, have a chat to your insurers. Some of the insurers that do still refer to the old act are insurers such as QBE and CGU. So if you do hold a policy for those insurers, no doubt have a chat to insurance brokers about what the next steps are. Again, no doubt the insurers will push back. We'll see what they will do. They have until, I think, the 14th or 15th of December to appeal, and I'll keep you guys updated on that further next week. I might throw it off over to you, panelists. Do you guys have any questions or statements that you want to sort of share with us?
I just have a comment based on what Sam talked about in terms of, for those actively looking at property in the market, get your bidding and skills up to speed. There are people like Rob Skeen who are buyer's agents, folks. Don't try and do this on your own. This is a milestone event in your lives. It's an investment. Make the investment in getting the right people to do the work for you and negotiate on your behalf. And that's really, if those viewers have watched us before, we've had Rob Skeen as a panelist here. Details are on our Facebook page. So yeah, approach Rob Skeen and surely he'd give you the most honest, transparent advice you could possibly receive. But that's a good point you made there, Sam.
I couldn't agree with you more, Lisa.
Absolutely. Just a quick question for you, Adam, if you don't mind. Talking about businesses trading insolvent, each year, as you know, a company has to prepare their annual solvency declaration to say that they are trading solvent. What are the implications if they sign off on that and say that they are trading solvent when in fact they're not?
Well, first of all, you've got some sections of the Corporations Act between 180 and 184, which talk about directors' duties. And I don't want to bore anyone with legislation, but the reality is that if you're not acting properly and with due care and diligence, and you don't have a directors and officers insurance package to protect you, you're exposing yourself again. It's a different action. If you could make a false declaration, ASIC can also use that as grounds in certain circumstances to have you apply to have you banned as a director. So that's the second risk. The third risk is that if you have made a declaration and a subsequent appointed liquidator is a liquidator subsequently appointed, then that declaration cannot be relied upon if it's found to be false. That is, remember that the insolvent trading provisions of the section of the Act talk about what a reasonable person would do in reasonable circumstances. So if you're a director, you can't just sit back and say, oh, well, you know, I relied on the accountant. No. What did you do? You can't say, oh, I just relied on the bookkeeper. No. What steps did you take? If you are a director that doesn't actually have a day-to-day control over the bank account because you let the bookkeeper do it all, that is, you can't just plead ignorance. You've got to take all reasonable care and steps to make sure you satisfy yourself that the company is not insolvent. Maybe next week, Ian, I can do a little quick example of what are the tests of insolvency, which are well established. There are 4 tests, and it's not just, do I have more assets than liabilities? That's just one test. There are 4 tests. So maybe I can do that next week to help.
That'd be a good idea, Adam. I think that would be good. Bernie, there's a question here from our viewers. What is the name of the insurance test case?
I'll bring up the exact details for you. So basically, there were two test case from Hollard and HDI Global Specialty and Hollard. There were the two. So they'll submit as one test case, and there'll be no doubt, I think there'll be a following test case around how this exclusion applies and how other sections of the policy sort of responds. So there will definitely no doubt be a second part. And I know ICA and AFCA will definitely be looking into that.
So it might be a good idea if we can post that information on the Facebook page as you go through them, because there are people that are actually giving a thumbs up on it in terms of wanting the info. That's great, Bern.
Guys,
Good question, Adam. If someone has an ATO payment plan, that's okay. That's not insolvent. That you can still make payments. So
that's okay, provided you maintain it and you don't miss it by $1 or 1 day. The moment you miss your payment plan by that time frame, 1 day, or you miss it by $1, it's gone.
And it goes back to that whole cash flow management that Ian talks about, right? If you have got your cash flow forecast, your accountant or your bookkeeper can recommend a direct debit mechanism for an ATO repayment plan, so you don't miss 1 day nor $1. You know, this is all about getting good support.
And that's the only way that I recommend if a client wants to enter a payment arrangement with the ATO, that it is done by direct debit. Because as Adam said, if that is missed by 1 day or $1, the plan automatically defaults. So the people that do want to do them and pay it themselves, I say, well, make sure that transaction is set up 5 days prior to it being due, just to make sure that it gets to the ATO on time, because otherwise it will default.
And remember that the tax office have very powerful measures now to even place a default credit file alert on your personal credit file, which can be very hard. Then if a director wants to go and borrow some money at some point down the road.
Well, Adam, if you're going to cover next week the topics you just said on the tests, or I might look at HR compliance at its peak in terms of what you guys businesses need to watch out. So I'll piggyback on that. Yeah, I'll jot that down.
Cheers, guys. Just being mindful of time. Let's close it off. And I thought I'd close it off with a quote. There are no secrets to success. It's the result of preparation, hard work, and learning from failure. No doubt, having advisors such as yourselves, your business will succeed. Ladies and gentlemen, thank you, and tune in again next week. Thank you.
Thanks, Ben.
Bye.